Hi guys, in continuity of the question September-December 2023 for section B question that we were doing before, let's continue the question and move to the second task of this CR. So the second part of this CR was to describe 8 audit risks and explain the auditor's response to each risk in planning the audit of Knight Electronics Company for 16 marks. Okay, so this is your examiner exact words that you have to identify the lines from the question where you pinpoint the audit risk. There is half mark for identifying the audit risk correctly, and then half another mark for explaining the audit risk correctly, that what is the audit risk there, what should the accounting treatment would have been, and what's the impact on the financial statements of the client, where is overstatement, where is understatement, or whether is there a misstatement. And please guys, keep this in your mind that you should use the word misstatement only when there are equal chances of over and understatement, both of them. Okay, so if there is a scenario that let's say there could be only overstatement in property, plant, and equipment, and using the word in the on the answer screen as misstatement in property, plant, equipment will not give you any mark. This is your examiner words that you have to use overstatement there. Okay, so you have to use the word misstatement very carefully. Only use word misstatement where there is actually misstatement. There could be over and understatement both. So let's start reading the question. Okay, so I'll read the question fully in one go without stopping anywhere and using my mind, that in the first go where I will identify audit risks. Okay. And while reading the question, from the lines where you identify audit risks, you can also copy paste those exact lines on your answer screen, and then using those lines as your opening statement, because they will also give you half a mark per risk. Then you can explain that audit risk. Okay, so let's start. It is 1st July 20x5. Your firm Hercules and Company has recently won the audit of a new client, Knight Electronics Company. Okay, so there is a line called that audit firm has won the audit of a new client, Knight Electronics Company. Okay, so this is a new client. As if I stop here and if I explain you the audit risk for winning the audit of a new client, as you know that for always a new client, audit team is not so much familiar with accounting policies. So there is no familiarity with accounting policies, balances, and transactions. Okay, so that's why what kind of risk would be there? There is, yes, you're right, there is an increased detection risk. Means there's a risk on the part of the auditor might not able to identify material misstatements in the financial statements. Why? Because he's not very well known about accounting policies, transactions, and balances of this new client named Knight Electronics Company. Okay, so that's why there is an increased detection risk. And also for a additional mark, you can also write that there is also less assurance over opening balances. Why there's less assurance over opening balances of this new client? Because this firm, Hercules and Company, has not performed the audit last year. Okay, so what you guys think, what should be the response for this risk? Yes, there should be. You have to make sure that there is a suitably experienced audit team assigned to the client. Adequate time should be allocated to perform the work, to obtain understanding about the Knight Electronics Company. Okay, and as there is less assurance over opening balances, so we should perform increased audit procedures on opening balances. So what should be the auditor's response? Here, that number one, we can write suitably experienced team. Number two, adequate time should be allocated. And we can perform increased level of procedures on opening balances. So if you explain fully this risk, you will get 1 mark per risk for identifying the risk correctly and explaining that correctly, and 1 mark for the auditor's response. Okay, and please keep this in your mind, guys. This should be the auditor's response. Okay, this shouldn't be the management's response. Okay, so some students also make this mistake. Okay, then moving forward, Knight Electronics company sells products enabling smart building systems which allow customers to efficiently control their security, lighting, and networking needs. The audit manager held a preliminary meeting with the finance director and has provided you with the following notes. So here the planning meeting notes start. Since its launch 5 years ago, Knight Electronics company has experienced high levels of growth such that the founder and CEO William Knight is considering a stock exchange listing next year. This is a keyword that is giving me a hint that there is also another risk. They are considering stock exchange listing for the company next year. Guys, what do you think? What will happen? Yes, you are right that if the directors are intending to undertake a stock exchange listing in next 12 months, they can manipulate the financial statements by in order to maximize the success of potential listing. Okay, so in order to get the success of potential listing, they will try to present financial statements which will show the best performance and best position. Okay, so the directors absolutely have the incentive to manipulate the financial statements. Okay, and how will they manipulate the financial statements? Yes, by overstating assets, by overstating revenue, by overstating profits, and by understating expenses and liabilities. So whenever the examiner adds such point that company is undertaking a stock exchange listing next year, so we got this, that okay, it means there is an incentive for the directors to manipulate the financial statements. And please explain how will they manipulate that? They can manipulate the financial statements by overstating. You can also use the word window dressing, or you can explain that by overstating assets, profits, income, and by understating expenses and liabilities. All right, guys. And please remember that, because I'm teaching you how will you answer your audit risk question. While you're doing this on your answer screen, you should copy this line that the founder and CEO is considering stock exchange listing next year. Copy this line onto your answer screen for half a mark, and then explain that why it seems you risky. Okay, so if they have an incentive to manipulate the financial statements by overstatement of assets, income, and by understating liabilities and expenses, then what should be the auditor's response, guys? What should be the auditor's response? Yes, you're right. Then there should be a very suitably experienced audit team so that they can identify where the manipulation is going on. There should be experienced audit staff allocated. Okay, there should not be a lot of junior team members. Okay, so also, again, adequate time should be allocated, right? And so that they can understand the significant risk of overstatement of assets and incomes. Okay, and very important, you should add this in your response. You can, if you write that they should increase their professional skepticism in order to identify, audit team should enhance their professional skepticism in order to identify this manipulation. Okay, so basically your examiner's words are that students usually tend to write that auditor should increase professional skepticism in almost every response, which is not right, guys. Okay, so there are very specific risks where if you write that increase professional skepticism, then it will get you marked. Otherwise, it's not. Okay, so this was one of the scenario in which writing increasing professional skepticism towards the client will get you mark. Okay, and you have to be alert. Auditors need to be alert to the increased risk of manipulation. Also, significant, as you know that there are many estimates and judgments involved throughout the financial statements. So they should, the significant judgments and allowances should also be very carefully reviewed during the audit. So if you explain all of this point, you will get 1 mark easily. But if you write even one response, all of these responses that I am explaining you here, it also will get you 1 mark, but you have to write it fully in one line. Okay, also. Okay, let's move forward. Knight Electronics Company has both corporate and domestic customers. On 1st October 2004, Knight Electronics Company began to offer customers the option to purchase a 3-year service agreement. This provides 3 annual services for products purchased. Customers pay for the servicing agreement in full at the start of the agreement. So, thinking like an auditor, what do you think if a company is getting the fee for full at the start of the agreement? What should be the risk in your mind? And according to which standard you should think? Yes, yes, you're correct. As per IFRS 15, you know that the revenue should be recognized over time, in this scenario. So basically, we have a risk. There is an increased risk that company may incorrectly record the full payment for the 3-year servicing agreement, okay, as immediate revenue, and not they are not they may not allocating it over time. Okay, so rather than deferring revenue over 3-year contract term, they might be recognizing this full fee of the servicing agreement at the start immediately. Okay, instead of recognizing revenue over the period of time, the company directors or the finance professionals of the client might have recognized the revenue at the point in time. Okay, so what will this lead to? So first of all, you have explained that you should explain what does IFRS 15 standards says for this, and how should we recognize revenue, and what is the risk here that there's an increased risk that they have recognized whatever the customer has paid for full at the start of the agreement at the point in time, instead of deferring it over the period of time. Okay, okay, so there might be incorrect application, okay, of IFRS 15. So what will be the final impact on the financial statements of this incorrect application? Yes, the revenue is overstated. The revenue will be overstated if this risk is present. Now, tell me, what should be the auditor's response to mitigate this risk? Yes, the audit team should ask management, should discuss with management about how are they recognizing the revenue from these 3-year annual services, as the customers are paying for these servicing agreements in full at the start of the agreement. Okay, so the auditor should also review. They can also review what is the company's revenue recognizing policy. If the company's revenue recognizing policy is that if the customers pay for servicing agreement at the start, they will recognize the revenue fully at the start of the period, it means they are implementing incorrect accounting. Okay, so it means the risk is there and the revenue is overstated. So this should be the auditor's response. Okay, so how many risks and responses have we done by now? So we have done 3 risks and responses. Okay, so let's move forward. Then comes in June, component parts are purchased from a number of suppliers. Prices of components have been steadily increasing over the past 2 years, leading to a reduction in the gross profit margin. Okay, so prices of the components are increasing, and that's why there's a reduction in the gross profit margin. The forecast financial statements for the year ending 30th September 2025 show inventory valued at cost. Hanji guys. Yes. What do you think? What's the risk here? Yes, you can write that if the prices of components have been steadily increasing over the past 2 years, and first you identified that leading to the reduction in gross profit margin, you wrote that by copy pasting the lines from the question screen, then you should highlight the applicable accounting standard. And what is the applicable accounting standard here? IAS 2. And if some student in new people has forgotten that which accounting standard applies here, they can write applicable accounting standard, instead of writing incorrect accounting standard number. Okay, so IAS 2 inventory guides us to value the inventory at the lower of cost or NRV, right? So Knight Electronics company have valued their inventory at cost without bothering whether NRV might be less than cost, because they have provided you a hint that prices are increasing, and gross profit margin is decreasing. Okay, so there is an incorrect accounting treatment, and you have to highlight here, and it will lead to overstated inventory. Okay, so what should be the response here? Auditor's response here, you should write that auditor should perform detailed cost and NRV testing. Okay, they should perform detailed cost and NRV testing in order to make sure that inventory is valued at lower of cost or NRV. And also they can also review aged inventory report to assess whether they should write down the inventory or not. Okay, then moving forward, in June 2005, Knight Electronics Company decided to revalue its premises, which had previously been accounted for using the historic cost model. So they have changed their policy from historic cost model to revaluation model. And then properties with a carrying amount under the cost model of 3.8 million were revalued to 8.4 million. Okay, based on the valuation performed by management. What is the problem here? Tell me guys, what is the problem here? If this valuation had been performed by an independent valuer, then there could not be any issue for me. Okay, but as an auditor, when I knew that this valuation is performed by management instead of some independent valuer, it means that management has the incentive to overstate its properties, right? So you should write that Knight Electronics Company, you should first write the applicable accounting standard. And what is the applicable accounting standard here? Again, IAS 16, property, plant, equipment. And you should write that this accounting standard suggests that the revaluation should be performed by whom? By an independent valuer instead of by management. Okay. And when it should be performed? When there is a significant difference between cost and revalued amount. And it should be performed for the whole class of this asset. Whole class of properties should be revalued. Okay, so the fact that first of all the revaluation is performed by the management and not by independent valuer, it means that the properties are overstated. This is how you will explain this risk, and then you will provide the response of the auditor that discuss with the management to get company's premises revalued by an independent valuer. Okay, and not by the management. And also this revaluation double entry should be reversed. Okay, then in also the finance director also carried out an extensive review of non-current asset lives and decided to extend the useful life of plant and equipment. Here this is about plant and equipment, okay, from 5 years to 8 years. So this is a very important risk that she occasionally tests. Okay, so you should first of all identify it, copy paste it on your answer screen, and then you should also again suggest the applicable accounting standard here, which should be IAS 16 property, plant and equipment. And you should explain that IAS 16 says that useful life of property, plant, equipment should be reviewed at the end of uh, at each reporting date, and it should be changed only when there is a genuine reason for this. Okay, so as CEO is already intending to list the company on stock exchange, we knew that, and extending useful life without giving us a genuine reason, it can cause the depreciation expense to be, it seems that they want to overstate their property, plant, equipment. So please write the word property, plant, equipment instead of non-current assets. Okay, so examiner specifically highlights that students write a non-current assets instead of plant and equipment. You should write the exact name of that asset. Okay, so there is an increased risk that depreciation expense is understated and plant and equipment is overstated. Okay, and then what should be the auditor's response? Again, yes, discuss with the management about the incorrect, discuss with the, sorry, finance director, the rationale of increasing their life, okay, from 5 to 8 years. What is the rationale behind this to increase the useful life of these planted equipment from 5 to 8 years, and consider its reasonableness. This will get you one full mark. Then in May 20x5, defective equipment used by Knight Electronics Company resulted in a small fire at its premises. The company has commenced legal action against the supplier of the equipment. Knight Electronics Company's lawyers have advised that the legal action is likely to be successful. When it is likely to be successful, it means the probability chances are more than 50 to 90%. So this is probable. So there's a probability that um, they will get the price of that equipment from the supplier, as the equipment was faulty. As a result, the finance director has included a receivable for the damages likely to be received from the supplier in the forecasted financial statements. Guys, tell me, according to IAS 37, provisions, contingent liabilities, and contingent asset, as you can see that this is a contingent asset, right? The outcome of the legal action is not yet announced. This is only likely to be successful, and it's only probable. Should the contingent asset which is receivable be recognized in the financial statement? Yes or no? No, it shouldn't be recognized. The contingent asset is recognized only when it is virtually certain. Okay, so this is again an incorrect accounting treatment, and you will highlight that the receivable is overstated. Okay, so receivables are overstated. So this is the impact on the financial statement. Okay, so what will you do here? What should be the auditor's response here? You should discuss with the management about the incorrect accounting treatment of recognizing receivable, and discuss with the finance director his rationale for recognizing contingent asset, why he has recognized receivable as a contingent asset, as also he knows that it is only likely to be successful. It is not virtually certain yet. Okay, so this should be the response. Then, okay, now see how many audit risks we have covered till yet. So this is in total we have covered 7 risks till yet. So we have to identify 8 risks. Okay, so examiner will always give you more risks in the question as compared to what she has required from you to identify. Okay, so if the requirement is to identify 8 risks from the question, there could be 9 audit risks or 10 audit risks. Okay, so there wouldn't be less audit risks. Okay, there would be always more. Okay, so an instance of payroll fraud was also discovered during the year. A payroll clerk had set up a number of fictitious employees, and the wages were then paid into the clerk's own bank account. Controls have now been implemented to prevent this from reoccurring, and the clerk involved no longer works for the company. Okay, so however, the audit manager is concerned that the additional fraud may have been taken place in the payroll department prior to the controls being implemented. So when there is a fraud in one area, and specifically highlighted area is payroll, you should write then there could be more fraud, and there is a increased risk of misstatements in payroll expense. Please write it specifically. Write the name where you see that the risk of misstatement will be. Okay, so you can also explain it that the previously discovered payroll fraud suggests a historical weakness, okay, in internal control system, which means that there is a control risk as well. Okay, and as there was a fraud already occurring, so there is a potentially other frauds in payroll system as well, which they have not yet identified. That's why we have a risk that there could be misstatements in payroll expenses. Okay, so what should be the auditor's response? Again, if you write here that auditors should increase professional skepticism and be alert to the frauds, to the other frauds in the payroll expense, it will also get you 1 mark. Okay, so auditors should focus on additional testing on the payroll and the additional procedures to identify the fraud and any necessary adjustments. Okay, so professionals, only using the word professional skepticism related response in payroll fraud risks, and in one other risk that there was stock exchange listing, will get you marked there. And in all of other risks, if you write increased professional skepticism, this will not get you any mark. Okay, the last one is William Knight would like the audit to be completed by 31st October 20x5. Due to this, what will happen? It will further increase the detection risk on the part of our auditor. Why? Because it will increase, because you can see that this is a tight reporting deadline. And when there's a tight reporting deadline, it will increase pressure on the auditors to complete the workload, to complete the work in this strict deadline. Okay, so due to increased pressure, audit team may overlook material problems in client's record. So that can also ultimately increase detection risk. So what should do? What should audit team do? Audit team should focus on that how they will obtain sufficient and appropriate audit evidence in this strict reporting deadline. Okay, so for that they can consider that there should have been interim audit before the final audit. Okay, or they should consider that they can also consider to increase the size of their audit team so that they can perform well. Okay, and they can also obtain sufficient and appropriate audit evidence in order to decrease the detection risk. Okay, guys, so this is how you will attempt the risk related question, and this should be your answer technique. Thank you so much, guys.